All right, welcome to today's trade breakdown. There was a trade I caught that was about 1 is to 15 on Gbpcad. And in this breakdown, I want to show us how I framed the trade and how I caught the trade. So I'm going to show you the trade. This was the trade 1 ratio 15. And then I caught this trade that was yesterday. That was on Monday. And I caught this one Wednesday. All right. So I'm going to frame these trades for you coming into this trade, how I was able to frame it and all of that. So what I do is very simple. I try to keep trading as minimal and simple as possible using basic trading concepts. Basic trading concepts. These are things that all of us know, but because it doesn't sound complicated, it doesn't sound it's too simple. People don't use it. For me, I trade what I trade. I just trade. Let me type some things out. Where's my text box? It's no longer there. To add this text box to favorite. Add to favorite. Add to favorite it. Okay, it's here. So logical concepts in the market. I don't trade patterns. I don't trade pattern. All these trend line traders, break and retest, support and resistance. Most of these things, most of those concepts are pattern concepts. So I don't trade pattern concepts. I trade concepts that they are deep in logic based concepts, logic based concepts. So I trade market structure, which simply tells you the flow of the market, how the market is moving. I trade imbalances, or rather imbalance. I trade imbalance, then I trade demand and supply. These are concepts that when you bring together gives you, so it helps you to create to be able to frame a trade. Okay, how to get in on a trade and how to get out of a trade. Okay, so market structure, imbalance, demand and supply. I trade one of the concepts I use the Fibonacci concept. I hope I got that spelling right. Fibonacci, I think it's double C here. Fibonacci, that is Fibonacci in this case. Let me just write it range. I need to know the range I'm trading in. You know, I need to know the range I'm trading in. So basically, these are few. These are just about four thereabout. A lot of them, but all these concepts are basic market concepts. When you now put these concepts together, you use it to do what I want to type now. Use it to do what we call it top down analysis. Now, when you bring all these concepts together, use them to create what we call top-down analysis. You frame your trade, you get in on the trade, and you get out on the trade. Why am I saying this? So once we start structuring this trade, you know that it's not random. You know that it's not random, and you can do it. The good thing about this is that you can get very healthy risk to reward ratio. Okay. So these are some of the concepts I apply in framing my trade when I'm doing my top-down analysis. Okay. That is not all. Liquidity should be somewhere there. Liquidity. We have the buy side liquidity. We have the sell side liquidity. All of these things, you know, These are the concepts I put together to frame my trade and then execute that trade and get my targets. Okay, for my entry and for my target, these are the concepts I put together to frame my trade using top-down analysis. So, taking much of your time, without taking much of your time, I hope. Okay, I was able to lock this. I don't want it to. I don't want it to scatter. I want to be saying it without taking much of your time. This is the trade. 1:15 is on 15 minutes. I took that trade on 15 minutes. I'm an intraday trader. That means that I tend to get in on my trade and hold it within that day or 2 days, 3 days. I should be out of a trade. Okay, I don't hold trades for weeks. I'm not a swing trader, so I try to hold my trade within a week. I should be out of a trade by weekend at most. I should be out of a trade by a weekend. So I'm an intraday trader, and as an intraday trader, I execute most of my trades on the 15 minutes and on the 5 minutes, but mostly on the 15 minutes. 15 minutes is where I get my entry, is where I frame my exit on the 5 minutes. From 1 hour down to 5 minutes, I try to get entries and exits, right? But for my analysis, which is top-down analysis, just like the name implies, I start analyzing from a higher time frame. And as an intraday trader, most of my analysis I started from the daily. Now, when you get to the daily, when you get to the daily, sorry, let me mark this. It should only appear on the 15 minutes, on the 15 minutes time frame, please. So, sorry about that. When you come to the daily, remember the concept I mentioned: market structure, demand and supply imbalance, liquidity, and of course the range, which I bracketed Fibonacci. When you come to the daily time frame, you ask yourself, where is market coming from and where is it going to on the big picture? Remember, I took this trade on a Monday. I think that was here. No, that was not here. That was here. That was here, Monday. So I took this trade on a Monday. Where is market coming from and what is market reacting to? Okay. So I marked out my supply zones on the higher time frame, on the daily time frame. I marked out my supply zone. This is my supply zone. This was where it mitigated, but I still left it there because sometimes a supply zone can be used more than once. You understand? I had to learn that the hard way. The supply zone can be used more than once. Price can retest a zone even though it has actually used that zone before. Price can retest the zone. So if you look at this zone, price used it here and sold. Came back here, created this zone and sold, but didn't take out the structural low. We are supposed to sell from here to clear this low. Okay, clear that low. And when we clear this low, what are we going to do? Look for a demand zone here that is unmitigated. All the zones here are mitigated. The whole demands here, there's no inefficiency here, there's no imbalance here. So all those zones are mitigated up until this very point, this very zone here. All right, all those zones are mitigated up until this very zone here, until here. If I got it right. So all those zones are mitigated up until this low. So until we get to this low, There's nothing too serious that will push price back up, except to use a zone it has used before. It will just maybe start retesting zones. But if you look at the GBP card, you can agree with me that it has been predominantly what bullish, on the daily. So if we're going to come down to the lower time frame, if we're going to come down to uh, if we want to do anything on this pair, it will be most likely that we are buying it. But when market reacted on this supply level, when market reacted at the supply level and took out this low and this low, it indicated some sign of bearishness. Remember, this is the daily time frame. So daily supply, we retested it here. Once I saw that market has dug into this supply zone on the daily, what I did was that market has dug into this supply zone on the daily. Remember, market took structure low here, this internal structure. Market took its low. Do you understand? Let me mark the structure for you because you must know how to mark structure for yourself. You can see what market was doing. Created this high, putting this low. It was supposed to break this high if we are going to continue bullish in this immediate structure. As an intraday trader, mark your immediate structure. You don't need to go so back behind to get your structure right. So mark the immediate structure, especially if you are trading on a time frame like the daily. If you want to mark structure on the daily, just mark from the immediate range of that structure. Immediate structure of the immediate range you are framing your trade. The immediate structure of the immediate range you are framing your trade. So if you look at this, we have confirmed bearish, broke through this low, came back to top order from somewhere around here. If you look at it, you see that we tapped order somewhere around here, this block here, and then it reacted from there, and then we sold, came back to retest it, and then we broke this low. So if you are marking your structure on the daily, higher low, higher high, higher low, higher high, higher low, we are supposed to create a new higher high that probably break this zone here and break this zone here. But what it does, the price reacted from that zone and it did a failure to swing, what we call a failure to swing. After creating that failure swing, putting a new lower low, no longer a higher low. Do you get? You put in a new lower low. All these are signs of bearishness. When you put in that new lower low, of course, you can uh, you can frame, you can know that you wouldn't know that price will buy back to mitigate here. You will start looking for sales. Yeah, you start looking for sales. Are you going to look for sales here? No, you are going to come back to the POI. Okay, your zone. Because right here, there is nothing else. There's no zone for price to react from except it gets there. And that was what price did. This zone was pushed through. When it got here, I'm doing all this on the daily. The daily, when it got there, you can see this rejection. This sell was on that Tuesday. And that was the Tuesday the sell happened. That's why I'm framing all these things. Let's go to 4 hour. So on 4 hour, it is clearer. This was when the market broke that structural low I was telling you. It broke this internal low I was telling you and came all the way here to miss to beat this zone by just few pips, and then it rejected, rallied up, and mitigated this supply here 4 hour. Once the thing that gave me the confidence to execute this trade is that there are some key factors I look for. Number one, I look for a liquidity sweep in the POI. I must be able to spot to say that liquidity has been taken, the POI, and that was what happened here. This candle, you can see it. Once this zone was mitigated, this swept liquidity, swept the previous high in that zone. highest point of this supply zone was taken. It swept it. That means liquidity has been taken, and immediately it did that, it rejected downwards immediately. Okay, you're not going to just randomly just jump into this trade, but this is a strong indicator that you're going to be bearish at least up until this zone. At least up until this zone. Immediately I was able to frame this. I've gone from daily to 4 hour. From 4 hour now, you can pick your entry time frame 1 hour, 30 minutes, 15 minutes, and 5 minutes. I prefer the 15 minutes. It gives more probable trades. So when I come down to the 15 minutes, I'll tell you why I picked the 15 minutes. When I came down to the 15 minutes, this concept, hope everyone has copied it. Some of the concepts I trade, you've seen how I'm using it. All right, you've seen how I'm using these concepts. All these things, I use them in framing my trade, and I'll show you some of them now in this entry time frame. So even if we go back to the 4 hour, let me show you an example of range. Okay, on 15 minutes, I'll show you example of some of these concepts, how I apply them in framing my trade. I've shown you how liquidity must be swept in my zone. I've shown you how I mark out my demand zones, my supply zones, the imbalances in the market, and of course market structure. But let's take that out. So focus on how I cut this trade. I took this trade, I executed this trade, I'll show you. So remember that zone we are reacting from is this place. It's the same place. Okay. So when we got here, start from structure, market structure. Market structure. Market has been on a bullish trend. I don't want to go too far down, but market has been on a bullish trend from somewhere around here. Okay, even all the way down here. Market has been on a bullish trend all the way down here up until this zone before we had this pullback. This could be a retracement, the bullish leg, or this could be a reversal. But for now, we are interested in just the sell, and I'll show you why I took the sell to this zone. Okay, so market has been on a bullish trend. You can clearly see we are trending bullish. If you mark your structure, you see it. Mark your structure, you see it. Let me start from here. This low, put in this high. This high, put in this low. This low, put in this high. Put in this low. We had, do we have any high here? We had a small high here. I put in a small low. We had this one here. Put in the small low. And then we had this last high. And after this, what did market do? Market wants to clear that internal low. Okay. This is the first sign that market wants to reverse. You could see what I wrote there. MSS, market structure shift. This is a structure shift. Whenever you see trend, higher high, higher low, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. And then when you see market disrespect or disregard this trend structure, there's a possibility that market is about to do some level of retracement, especially when it is reacting from a 4 hour supply zone. Remember, this place was a 4 hour supply zone. It's not a random zone. It's a 4 hour supply zone. So on the daily is a supply zone. On 4 hour is a supply zone. So we are looking for daily 4 hour and 15 minutes, rejecting from the same zone, reacting from the same zone. All of them were in supply. On the daily it was a supply zone. On the 4 hour it was a supply zone. On the 15 minutes, you now get a rejection like this that took out the last structural low or the last structural high if it was a bearish trend. Now after this, you know that okay, you have something going on for you here. Let me take this out. You have something going on for you here. What did I do? I marked out the supply level of the 15 minutes. That is this last white candle here. This last white candle here that you can see. This one. I marked it out as my POI. And look at what price did. Before price broke this market structure, before price actually shifted structure, it did a bullish move that dropped my inducement. This is my liquidity. Okay. This is my liquidity. So let me put the dollar sign there. So this is my liquidity. Actually, you have this is money because market is gonna come back to clear it. Okay. So what did market do? Market came back, tapped into this my supply zone cleanly, and then started dumping. I will tell you how I framed this. I'll show you how I framed this target and why price got to that target and rejected immediately. Now I use imbalances for my targeting. If you observe here, you'll see that this is a demand level and there's this heavy imbalance here. All right. This sorry, let me delete that. This heavy imbalance here. You can see this imbalance here. This place here. You can see that imbalance, right? So that imbalance is there. I now said even if this market is gonna reverse, this market is most likely gonna reverse from either of all these demand levels. These are different demand levels. Okay. These are different demand levels, but the demand level that have stronger power to react, that market will react from, are the demand levels that broke structure number one. Apart from it broke structure, it has an obvious or impulse move. It broke structure, it has an obvious impulse move. You understand? It broke structure. Number one, it's going to break structure. Number two, it's going to have an obvious impulse move. This candle fits that. This was the demand zone that broke this structural high. And look at this obvious, push, impulsive push. This one right here, this demand zone right here, you say, Big Blue, why didn't you use this demand zone? It did not break any structure. There was no structural high it broke. You will say, Big Blue, why didn't you use this demand zone? This demand zone here, it broke this structure. Of course it did. So we can as well target here. It will be maybe TP2 or TP3. But this was my final TP on this trade, on this framing. So I marked here, okay, using imbalance to know that, okay, I'm going to um, target the next imbalance with the highest probability. I've told you why I targeted there. So what did market do? Market came back, mitigated me, and the good thing is that sometimes it mitigates you up until 50%, mitigates half of the POI. So if your entry was to be here, this goes from 1 is to 15 to 1 is to 28. You see how crazy this would have been. From 1 is to 15 to 1 is to 28 if your entry was here. So that is how serious it could be if you use 50% into your POI. If you trade from 50% to your POI. And what did market do? Market mitigated me and jumped to profit Tuesday, as of Tuesday, what? 4:45 p.m. Okay, 4:45 p.m. Less than a day. You're out 1 is to 16. I'll tell you how I framed this trade and how I got this one. This is 1 is to 4.19. When this delivered here and started ranging, all these things were ranges. I looked at this, I say, what can be done? You understand? What can all these things are ranges? So this market will still be bearish for some time. I know this market could be bullish overall. If you look at the daily, remember we are coming from the daily, and we saw that market took a certain low Ahmed. That is a trial. Market ticket. Okay. So we are just in a range. Buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. We are predominantly bullish, but recently market has been trending bearish. So we want to trend, we want to stay with the trend. You could see this, 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 this. You can see that market has been trending bearish. This is a clear bearish trend. You can see that market has been trending bearish. Anytime market comes to premium zones, we'll try to take market back to discount zones until a demand level will be triggered and we will continue our bullish move. You understand? So this is even higher time frame bearish if you mark it. The immediate structure, the immediate structure here is bearish a little bit. So you can see that it's not overall, but you can see from here, October, market has been doing what? Selling. Market has been doing what? Selling. Creating lower high and lower low, lower high and lower low, lower high. All this thing we are doing is just within this range to create a new lower low, hopefully. Okay, hopefully. Or we could reject that and close above one of the lower high. If this market closes above this now, closes are actually close above it, we are going to start looking for bullish trades, going to start looking for buys. Because this is the last lower high. If it closes above this, we're going to start looking for what? For buys. All right. So we can say we can categorize this as a failure to swing, close above, comes back, pick order, and then we'll go for buys. But for now, we are bearish. I'm just explaining why we are taking bearish trades. So I looked at this. I saw that market has been in a serious range without doing anything. I knew that whatever that is going to give market any clear reaction, the impulse move for the day will come from the closest imbalance. Okay, the closest zone, the supply zone. So I marked my range. This is where Fibonacci 2 comes in. From this high, this was the last lower high, to this low, I marked my range. And the rule says that you take sell trades from premium and you take buy trades from discount. So immediately this market crossed this 50% line. This 50% line 0.5 up until this 0.75, they are called premium zones. Then from 0.75 up until 1 itself is called extreme premium. Extreme premium. So I tend to take setups from the extremes because it gives me higher risk to reward. Not just that it gives me higher risk to reward, it gives me higher probability. It gives me higher risk to reward. I might not need to trade every day. I might not need to even see a trade all the time. But anytime you're able to frame a trade that meets this criteria, it has a higher risk to reward and it has a higher probability of playing out. Okay, so I just marked the zone and I left it. I have it. I think I have it somewhere here. Let me look for it. I marked all these things and I left it. Let me go to my downloads. I marked all these things and I left it. Okay, this was when the trade peaked. Sorry about that. I think this is a GBP card. This was when it triggered. This was when I marked it. After this one has played out, this was when I marked this one. There was also a picture where I marked this one. I have all of those things. This was when I marked this one and before it triggered. You understand? This one was GBP USD. I marked this trade before it delivered. Let me see if I can still see where I marked it. This one's where some of my trades. This one was volatility. This was GBP USD when it picked up and started selling, and this was when it delivered. So all of these things, You can see it clearly. So market is reacting from this supply zone that broke this structure. Do you get that broke this what structure? Supply zone that broke the structure is what market is reacting from. Remember, I trade only from extreme premium and extreme discount. Not that I trade only from there. I prefer to trade from there because it gives me what they call it, stronger probability. You can see here again, even though there was no supply level here, from this high to this low, what did market do? This is a range. This is an internal range. Okay, we're trading internals from this lower high to this lower low. What did the market do? Market reacted up until it got to 618, cleared 0.5, which is this premium zone, 618. It didn't get to extreme premium, at least it almost got there. And that is because, okay, look, I would have that's why I did not take any trade here. This was my zone at the extreme premium and I was waiting for the trade. This was the only unmitigated supply zone I could find. So I was waiting for price to come there and price clearly ignored it, reacted from whatever it reacted from here and dumped massively. Did you get? So after which it now triggered this trade and then this zone triggered and then it dumped. Guys, this thing is not rocket science. It's not rocket science, right? It's not rocket science. It's not like it's the most difficult thing on earth to do. No. Keep your trading simple. Trade the concept, trade whatever concept you understand. Keep your trading simple, keep your trading basic. You don't need your trading to be so complicated to make it profitable. All right. I said I'll show you guys where I took this trade so that you can verify and confirm that I actually took the trade. Let me see if I can. I think I have it on my Telegram. So I'm going to quickly go to my Telegram. We are going to see where I executed this trade. But there was an issue with this trade, not from me, because I actually took my trade. I tried to take my trades. This trade picked order by 6:15 p.m. and by 10 p.m. Nigerian time, market closed, and there was this massive wide spread that eventually took me out. So this massive wide spread that eventually took me out. This is my personal trading journal. I try to journal my trades. I'm the only member here, so I try to journal my trades. Let me see. Okay, this is it right here. Gbpcad 15. I got in on the trade here. Set my SL clearly above this last sweep. Clearly above that sweep. Somewhere here. I set my SL somewhere here. Markets picked my order and just kept ranging. Sometime along the line, market was even still here. Just here. Market took me out. The spread was so wide. Market was here and was able to take me out. Market was here and took me out at my stop loss. After the whole range and everything, market started dumping. Okay, so you have seen it. It's not what I'm telling you is not story. Do you get? What I'm telling you is not story. That is how it works. You can catch good risk to reward. Don't see people catching it as if they have two heads, and don't believe it is impossible. It is not something you do every day. It's once in a while when you see setups like that and you take advantage of setups like that. Okay, it's not every day you see setups like that. There are some days like today is 1:4, 4.19. Okay, and it's still a very solid trade. and it played out from played out what played out from 1:15 p.m. to 6:30 p.m. I don't like holding trades into the night. I don't like holding trades into the night. It's really setup. I'm running on very good profit, so I can leave the trade to run through the night. Apart from that, I don't hold trades in the night. I don't take entries in the night anymore. After what happened to me here happened to me, so I stopped taking daily. I stopped taking last candle of the day trades. Let's say from 6 p.m. I won't take any entry again till London session opens. You understand? Till London session opens, because Asian session for me is the spread is heavy. You understand? The spread is heavy, most especially depending on the kind of pairs I trade. So the spread is heavy, and I want to keep my stop loss at objective invalidation. We have objective invalidation and we have objective target. Your stop loss should be at objective invalidation. The closest invalid, this place, I knew that if market breaks above this place and closes with a body, we have resumed the bullish move. This would have been a liquidity sweep and all of that. We'll resume the what? Bullish move. So the place my SL was actually okay. It's not too tight. It's actually very okay. All right. But markets use this manipulation. Markets use this manipulation to take me out, but that is fine. So this is how you frame your trades and all of that. Let me not bore you guys so much. This is how I was able to catch this trade, and all of that. Right now, what can I say? Can I frame anything? Can I frame anything? Is there any zone here? No efficiency here. Okay. Anything around here? No. Anything around here? Okay. This is the closest. This is the closest supply level. Closest supply level is here. So if this market beats this zone, it is most likely it's gonna click. It's gonna react from here, most likely, and then we can get confirmation and see how it goes. I hope this helps someone out there trying to figure out an edge, trying to figure out entry criteria, exit criteria, and all of that. You understand? So there's another entry criteria, like I said, when you refine your POI, that's why I added this 50% line. This market actually came to 50%. So imagine I was doing 50%. This one is to 4, becomes what? A 1 is to 8. I've practically doubled it. Okay, I've practically did what? Doubled it. And then if I should bring my stop loss a little bit down, I can actually get 1 is to 10 here. You can see that becomes a 1 is to 10, targeting this last um low, this last market low here. There's different ways I use in my targeting. Look at this. This was the last market low. And what did price do? Price hit it and up it goes. 1 is to 10. If a 1 is to 4 trade has become a 1 is to 10 trade. This one is to 15. I take it up to this zone now. It becomes what? 1 is to 28. Almost 1 is to 30. Almost 1 is to 30. If I should work on my SL a little bit more, I'm having 1 is to 32. I'm having 1 is to 32, and it is the cleanest pick. It just taps you, gives you TP. Taps you, gives you TP. This one will be overstretching it. We are trying to be realistic. What kind of execution are we going to realistically take? I will not take this type of execution until I have seen it play out nothing less than 100 times. Okay, so for now, I'm still back testing it on this pair until I've seen it play out nothing less than 100, and that's why I say I don't delete my setups. I leave all my setups, because in my multi-time frame analysis, in my drop down analysis, I do setups on the particular pair, the particular time frame I'm drawing. I restrict my drawings to that time frame. Like on 15 minutes, this thing can only be seen on the 15 minutes. If I go to the 30 minutes, you will not see it. It's not there. And this one, I'll also take it back to 15 minutes. It should not be in the 30 minutes. So it should be only visible on the 15 minutes. So you can do that. Go to your visibility. Sorry, 30 minutes. I don't have much I drew on the 30 minutes. That's why you're not seeing anything here. But on the 15 minutes, you see my setup is there. Okay, so I don't clear my setups. I don't clear them. I use them to know what the market has done. I always, whenever I open the particular time frame I am on, I try to see what the market has done. Okay, so this is what the market did. This is where the market is coming from. This is what the market is doing. This helped me to have narrative on that pair. It helps me to do what? To have a narrative on that pair. So I can just immediately scroll back. So, oh, this was what the market did this time. This was what the market did this time. Now, where is the inducement of this? Where is the, remember I said inducement has to be in your what? In your POI zone. It has to be in the supply zone. Your inducement has to be in the supply zone. Why I will even take this one is because look at the inducement right inside the zone. This last back candle week. You can see that. And what did market do? Market cleared it before market dumped. You can see that how market cleared it. That is one of the reasons I can even put my what they call it, my entry somewhere here. So this is my liquidity that pulled market back. Market took that liquidity, and then we had that sell. Okay, okay, we had that sell immediately. Market dumped. So that is it. You've seen the liquidity for this one. So that is it. So guys, let's lock in together. Let's lock in together. GBP card. If you like this kind of setups, you like this kind of setups, you like this kind of approach to the market, we can you know, you want me to put you through, I can put you through. It's a very basic approach to the market. It's not all the days you're going to catch a setup, but this is the making of an A plus setup. Of an A plus setup. Few times it will fail you, it will fail you. Few times it will pay you, it will pay you big. All right. Few times it's going to pay you, it's going to pay you big. You take this trade 10 times, you are certain of coming out in massive profit at least 3 to 4 times, 30 to 40% win rates, or even more. Depends on how consistent you are, so that you don't take risk, you don't take losses that go against your rules. Your A plus setup should have a set of criteria it must meet. It must have a set of criteria it must meet. What has happened, how did it happen, blah 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 blah. So all those things must be there. Once you have all that, once you have all that, now you know that okay, you're good to go. You're good to go. So that is how it works. Okay, that is how it works. So this is it here. I hope this helps someone out there. You have a question, don't hesitate to ask. Sorry, let me make sure this is on the 15 minutes alone. Okay, so it's only on the 15 minutes. So if I should go to daily, what you're going to see on daily is markings of the daily only. These markings do not reflect in any other part of the structural analysis. So if I go here, you see that I mark only the days. So I need to even limit it to just 1 day. So it's a daily is a daily zone. This one, I think I've done this one. Have I done it? Let me see. No. one. So one, you can see that. Okay, go to the 4 hour. You see what the 4 hour is doing. Come down to the 1 hour. I don't think I marked anything on the 1 hour. Don't think I marked it. But even if I should frame something on the 1 hour, it's almost the same thing. Look at the supply zone here. This zone up onto this sweep is the supply zone. And that was where market reacted from. And if you see that this market is reacting from this supply zone here on 1 hour. 1 hour even has a cleaner structure. The higher the time frame, the cleaner the structure. The higher the time frame, the cleaner the structure, the stronger the bias of that structure. If daily is bullish and you are trading, you're taking bearish trends on a very low time frame, you are trading against a higher time frame bias, a higher time frame trend, you will most likely be stopped out if you are not careful. Okay, you will most likely be stopped out. So you guys can see 1 hour, 30 minutes. I don't use most of these time frames. And then 15 minutes was where I put my trade. Thank you guys for paying attention. Do stay safe, be good, and I'll see you when I see you. Like I said, don't hesitate to reach out, don't hesitate to ask questions, and hopefully we are going to get paid using this simple, very straight to the point strategy. Do have a great day and bye bye for now. My name remains yours truly, Big Blue FX.